Okay, everybody, it is me, and it's Friday. Friday. I don't know about you, but I'm happy that it is Friday. December 4th, 2020, and we really have to talk. Let's start off with this. A trifecta of new record highs for the stock market. The Dow Jones Industrial Average, the S&P 500, and the NASDAQ. New record highs across the board. Now, you are among the few that are not surprised at all. You are also among the few who realize that we're not done. The market is going much higher, much higher. The promise of easy money has got this market giddy and frankly euphoric. And these euphoric stages can last quite a long time, especially again with the promise of endless amounts of easy money. And there's going to be all kinds of ramifications for this, a ripple effect through the whole world economy, actually. All right, so anyway, I have a lot of stuff I want to cover with you, so let's do that. Let me finish with the market. So yes, record highs across the board. No surprise to you if you follow this blog. Cryptocurrencies fell into some pressure today. I really do believe that another leg higher is coming. We're in a consolidation phase. I would not be disappointed at all to see cryptocurrencies in aggregate retest the recent lows. And if we bounce off that again, forget about it. To the moon. That's where cryptocurrencies are going here. Okay. Gold and silver caught a bid today. Crude oil keeps going up. We'll talk more about that in a little bit. 10-year yield, 0.97. We are nearing that 1% mark. I'll talk about that too in a little bit. The dollar finished slightly positive after being down earlier in the day, but yesterday the dollar got decimated. So you would expect a little bounce. With the promise of more debt, like you cannot believe, dollar devaluation, the dollar is going much lower, much lower. As a matter of fact, it's interesting. CNBC had an article out earlier in the day talking about the correlation between the weaker dollar and the stock market. It seems like they're starting to catch on. We can't keep it a secret anymore. Can't make it up. You can't do that. All right. So what I want to do here and now with you is do a little blow by blow, and it's going to be lovely. Okay. Okay. So we got this abysmal, and if I don't stress that enough, I mean abysmal jobs number this morning. It missed the mark by a mile. We got 245,000. They were expecting 200,000 higher. We're actually at a net loss of about 500,000. You're not supposed to know that. But then we got followed up by this. The U.S. trade deficit again is widening. How many of you are surprised about that? How about none? Because I've explained to you that debts and deficits are going to continue to balloon. We haven't seen anything yet. Okay, let us move forward here a little bit. So we had Larry Kudlow live on CNBC today, and he was asked about this abysmal jobs number, but he said, quote, "The economy is still strong." The man is delusional on an epic scale. Look, the election's over. I think he can stop acting right now. Anyway, but that's something else. How about this one? Right after Larry comes out. Job growth has seriously slowed. Economists react to the disappointing jobs number. But Kudlow says, we're doing great. Unless, of course, you're one of those people that are unemployed, losing their jobs. Now, today, if you were paying attention at all, with the rising of bond yields, 10-year yield 0.97, banks are getting bid higher. Okay, you would expect to see that. There's a little bit of a sector rotation going on. Here we go. Oh, there's some interesting stuff I want to read to you here. Reuters, stocks higher on grim jobs report and stimulus hopes. Wall Street main indices opened near all-time highs on Friday. This is earlier. As worse than expected jobs growth number in November spurred bets of a new fiscal stimulus package for 8 freaking months. We've been hearing about that, between Pelosi, that freak, and McConnell, the other freak. Did you ever really look at those two people? They're hideous looking human beings, but that's neither here nor there. Maybe it is. I don't know. Now, I want to read this to you real quick. This is Reuters. Global debt to hit $200 trillion. You see, what they're not telling you is this number is a complete falsehood. We're in the multiple quadrillions. You're not supposed to know that. So they got to flesh these things at you. Oh, it's only 200 trillion. Absolutely not. It's in the quadrillions. No one actually knows how big the actual debt bubble is. Okay, because if you look at here, if they were telling the truth, they would explain to you that 200 trillion, and this isn't even the real number, is at face value. What they're not explaining to you is there are layers and layers and layers and layers and layers of derivatives right underneath that. So it can't be calculated. It's in the quadrillions. That's where we are at. So this is a complete falsehood. It's fake news. Let's move forward here a little bit. It's crazy. It's absolutely crazy. All right, now I want you to pay attention to this because this is very, very important. Now, it really is very important. 3 days ago, this was the headline. U.S. manufacturing activity loses momentum in November. 3 days ago. Now today, 3 days later, U.S. factory orders increased more than expected. You see, they believe that you have the memory of a goldfish. And you can't put things together in your own head. The fact of the matter is most people can't. They cannot remember what they ate for breakfast yesterday. Okay, so 3 days later is an eternity. They can spin it and twist it however they want. This is me. I wrote, let's all laugh. Just 3 days ago, this was the headline. U.S. manufacturing activity loses momentum in November. This was the ISM report. Now, they want us to believe this just 72 lovely hours later. You can't make this stuff up. U.S. factory orders increased more than expected. I say this is such dog shit. You know how I like to say that. It's just total dog shit. Okay, we already spoke about Larry Kudlow. Blow. The man's all about blow. You know that. Now, I want to talk about this real quick because I addressed this a long time ago, and I want to address it again. I had said specifically that if the 10-year yield regained 1%, and we are knocking on the 1% door, that I would consider, or I would, open core positions. What are core positions? Okay. There seems to be a lot of confusion when I was tweeting about this earlier, and I posted this in my newsletter. A core position is when an individual, you, me, buys stock in a particular company. That's a core position. To me, a core position consists of, or would consist of, and has consisted of, buying shares of stock in a large cap company that pays a dividend. Okay, people do this for as a long-term hold, collecting the dividends, reinvesting them. Okay, I have done this in the past. Now, I said, again, that if the 10-year yield got to 1%, I would consider doing that. Now, I want to read this to you. This is how I am responded to core positions. As the 10-year yield approaches 1%, I am not considering opening up new core positions. Core positions meaning buying shares of stock in a large cap corporation that pays a dividend. Has nothing to do with trading. Okay, I will be trading this market just like I've been trading it. Honestly, my lions, you're all lions now. I proclaim you all lions, okay? And myself have so vastly outperformed the market that it makes no sense to me to buy a core position. Why would I put X amount of cash to work in a core position when I can take that same amount of X and make multiples on it? Okay, that's what I've done with this market. This year has been epic. Markets are literally gone straight up. And it's going to continue doing that until when? Until it doesn't. Now, for those of you that may not know, okay, my free newsletter, link in the description of this video, I run this like a massive, and I mean massive hedge fund. I have 41,000 people now have subscribed to my newsletter. I run my newsletter like a hedge fund, okay, but it's free. So there's no fees or anything attached to it. It's free. You cannot get better than that or do any better than that. So anyway, that covers my little thing here on core positions. I will not be opening core positions. There's no reason for me to do it. Now, I'm not saying real quick that this is not the right thing to do for some of you. If you are not a trader, okay, if you're a person that likes to buy and hold, once that 10-year yield gets above 1% and stays there for a little while, it wouldn't be a crime, okay, to take up a core position or two in a few large cap companies that are paying a dividend. Okay, that's generally how people have made wealth or created wealth over the years. But right now you have to understand, there is risk. There's no doubt about it. But for me, I don't see any reason to do it. Okay, let us move forward here. We're hearing more about this momentum, I'm reading this, on a COVID aid deal. 8 months. I'll believe it when I see it, okay? The American people are getting destroyed. Here, disappointing jobs report bolsters the case for stimulus checks and more relief, economists say. Well, let's see. Larry Kudlow is supposed to be an economist, but he's not saying that. He's saying that the economy is doing strong, so people are doing great because we're all rich. We heard that too by some politician with a strange complexion, but we don't talk about that anymore. Let us now move forward. Now, how about this one? Over the past, 5 or 6 weeks, every Monday prior to the market open, they float out positive news on the vaccine. Just gets floated out here, okay? All in an effort to prop up the stock market. So this is me. How many of you are expecting positive news on a vaccine to be floated out prior to the market open on Monday? In case you haven't noticed, this phenomenon, it's a phenomenon, has now occurred every Monday for weeks. Got to push those stocks higher. It's incredible. Absolutely. And this is sad. This is CNBC, quote, signs of hope for workers in the hard-hit leisure and hospitality field all but disappeared in November on this abysmal jobs report. And their prospects for getting rehired grow bleaker by every month. But the stock market just put on a trifecta of record highs. I want you to think about that. I want you to think about that. Here, let me read this to you. Because this obviously was a misprint or something. CNBC, stocks higher after the November jobs report shows just 245,000 jobs created. That's 200,000 less than economists expected. Does that sound normal to you? Listen again. Stocks higher after the November jobs report shows that just 245,000 jobs were created, a miss of 200,000. Yeah, sure, stocks higher, rah, rah, rah. Again, here, you can't make it up. It's impossible. It's freaking possible. Now, I'm going to give all of you a heads up here. I've been working very hard and very diligently on a new book. I'm about halfway through it. I got a lot of work to do, and I mean a book. It's an opus of the markets and trading. I'll keep you all in the loop. I'll let you know when it's published. It's going to be lovely. Okay, so we heard about this. This is all, again, par for the course. The European Central Bank will be extending 2 key stimulus programs. Really? I'm shocked. You mean they're going to continue creating cash out of thin air, buying assets? Oh, I would have never guessed this. People, I'm telling you. Now, how about this? I want you to sit back. I really do. Sit back for a moment. Take a deep breath. I'm going to read this to you. The Bank of England is being criticized for losing track of $68 billion in banknotes. And yet the bank is not concerned about it. A spokesman for the bank said, quote, "It is the responsibility of the Bank of England," I'm reading this, "to meet public demand for banknotes. The bank has always met that demand and will continue to do so." You notice what's missing here with the spokesperson from the bank? They're not addressing at all the $68 billion in banknotes that are just gone. They're just gone. People, I'm telling you, we're living in Twilight Zone. Now, oh look, people are starting to catch on. Here's the headline. Why a rising stock market and a weak dollar are likely to keep on going hand in hand. Hand in hand. People, look, it's crazy. Oil pushes towards $50 a barrel as OPEC plus some kind of a deal to slowly taper production cuts. Isn't this just great? I mean, I don't care, and I'm being honest with you, how freaking hard you would try to make up the stories and the headlines that I just read to you. Okay, you can't do it. But the stock market keeps going higher. It will continue going higher. The dollar will continue its death spiral. But that's beautiful. It's a beautiful scenario because you and I have a clear understanding of exactly what is going on here. Okay, that is our strength. If the zombified people living outside my window, there's a window over here. These are fake windows. Fake. Yeah. Real window over there. If the zombies out there want to believe what they're being fist-fed, well, good for them. Good for them, because this here is a natural selection, people. And you, if you've been with me through this entire video, now 17 plus minutes, you got it right. And you know exactly what is going on. And I say, bravo to you. All right, look, it's Friday. And people, you're not going to see this guy again until Sunday. There's just no doubt about it. Unless, I don't know, the apocalypse happens to happen on Saturday. Got a busy day tomorrow. Anyway, people, I'm going to leave you off with my favorite 3 things. And we're going to do this together. You ready? Love each other. Care about each other. And be charitable. This guy right here loves you a lot. Please share the video. Ponder what I have discussed here in this video, if you can even get it through your head, because it's just too bizarre, but it's the reality of the world we are living in today. And it's lovely because we are together, okay? And we're going to be charitable, and we're going to care about each other, and we're going to love each other. We really are. No matter where we are in the world, we are responsible for each other, okay? If we adopt that kind of an attitude, we'll all be better off. Wouldn't you agree? See you Sunday.